Hi and welcome back to my channel Duncan Analysis. Today we'll be having a recap on the two ASX stocks I spoke about in my last videos, NEARMAP and Beach Energy. So here we have the daily chart of NEARMAP, and today's price has gone up and has closed at $1.92.5. So we could have a potential uptrend here, which may run like this, potentially. We'll have to wait and see how the price moves in the upcoming days. So let's jump to a smaller time frame to see what potential moves could be upcoming. Not much to see, just price consolidating sideways, as we can see from here, and also at the resistance line. So when a resistance or support is hit multiple times, the more times it gets hit, the weaker it becomes. So if this keeps up, there's a high chance that we'll see a breakthrough in the next day or two, potentially. However, keeping in mind that nothing is guaranteed, and we could see a reverse if it breaks below this, somewhere around here. So the stop loss that I recommended the other day was about $1.87. So at the moment that's pretty good, and doesn't seem like it will touch it if we keep moving up. So next up, let's jump to BPT. So this is BPT on the daily. Unfortunately, we seem to have fallen through those two strong trend lines that I drew yesterday. However, we've found support at around this point here. Do keep in mind that horizontal support lines show horizontal support and resistance lines are much greater, are a much stronger form of support and resistance than a trend line, which shows the direction of the market. So what we can see here is that the daily closed on what we call a hammer candle. So this is a sign of reversal. In this case, the candle is closed on a support, which means there's a higher chance that this will bounce back up now. So just keep watching and see where the price goes in the next days to weeks. And of course, once again, keeping a decent stop loss below the previous low, which will probably be around the $2.20 or so mark, based on how weather's closed. So next up, we'll be talking about a new ASX stocks, A2 Milk. So A2 Milk Company Limited, A2M, sources, produces and supplies A2 brand milk and milk-related products in Australia, New Zealand and Asia. A2 Milk are looking to maximize growth from existing products in core markets. That means focusing in the Greater China region and the US. However, they are exiting the UK market to focus and expand into new markets in Southeast Asia. They are currently market testing with a pharmaceutical company in Korea called Yuhan. Currently, A2 milk is marketed as a healthier choice than regular A1 milk. A few research groups suggest that BCM7, which is found in regular A1 milk, may be linked to type 1 diabetes, heart disease, infant death, autism, and digestive problems. Just some personal thoughts on the coronavirus influence on A2M. Chinese parents may stock up on A2M formula instead of buying them so frequently. However, shipment may be delayed due to Chinese custom clearance. I also feel that the coronavirus outbreak may be great for investors as parents may start to realize the importance of immunization for their babies. So let's jump to the chart to see what's going on. So let's start off with an analysis of the weekly chart of A2M. So as you can see here, back from October 2017, there's been a nice uptrend running all the way to this date, today. And recently it started to create a pattern, what we call a symmetrical triangle. So when a symmetrical triangle forms, by the time it breaks out, it's either up or down, as you can tell by the name. There's no real direction that it will go until you figure it out based on confirmation of the move of the price. However, for now, what I do see is some indications that the price may fall soon, based on the RSI and the CCI sloping downwards at the resistance, and also the price showing highs at the resistance. As you can see right here, this point here corresponds with this point here, and the price moved up to this point. However, the RSI in this case was basically flat, and the CCI has been sloping down for quite some time now as well. Now to have a better look, let's just go to the daily. So today, A2 milk closed at a price of $14.89. On the daily, we can see an even more clear bearish divergence at this point here. The price was at $15, and it moved up to $15.66. And on the RSI, we can see that the divergence is pretty clear right here. So I'm not 100% sure if this has already played out or not, but because of the daily chart, I don't feel like this move is much of one to consider that the bearish divergence has played out. What it has done is it's bounced nicely on this uptrend and started going up again. However, if you were to buy in, or if you were looking to long or short, I would say hold off for now and watch as the market plays out. We may see that the price breaks above this current resistance here, and if it does, there's a likely chance that it'll hit this teal line and bounce back again, just like it has in the past. And at this point would be where I would short it, and my stop loss would be above the previous high, which is around $15.70. So that's it on today's analysis. So if you like my video, please like and subscribe, and give me some feedback in the comments below on anywhere I could improve, or what else you'd like to see or hear about. And don't forget to press the notification bell as well, because apparently the YouTube algorithms are pretty bad and you may not receive my notifications. And I'll see you again next time.